Cathie Wood is legitimately brilliant.
1 year later.
It really is true that Cathie Wood is the kiss of death. And, you usually don't want to say that, but I think you have to throw out all the bromides and really speak truthfully here because the viewers deserve it.
Jim,
she's awful. I do when I see her buying things. I am shocked at what she buys and how she buys. She buys like someone who just started yesterday.
Cathie Wood is a big name on Wall Street. She's known as the institutional investor that's the most bullish on Tesla stock. Her approach to ETFs and financial products differ from the old Wall Street crowd. Her funds focus on innovations, things that could change the society we live in. While analysts focused on numbers and business models, Cathie turned to what those same businesses would be worth within decades instead. She invested primarily in companies that would disrupt the future of whatever market they were in. While the pandemic was rampant, 2020 was Cathie Wood's year. Her ETF, ARKK, gained 150%, an astonishing return in the stock market. Jim Cramer called Cathie Wood a genius, a premonition of what was to come, since Jim Cramer is usually wrong about the stock market.
Cathie Wood and her team at ARKK Invest have made some incredible calls, and my hat is off. My hat is tipping to them. They absolutely deserve all the praise they're getting. We are going to continue to follow her like a hawk.
The pandemic had raised the value of many streaming services. People were stuck in their homes, which meant companies which allowed employees to work from home became more relevant than ever. Zoom, Roku, and a handful of other stocks happened to be part of Cathie Wood's portfolio. Any investor who had ARK Innovations ETFs made several years' worth of gains that year. After the pandemic ended, investors poured in money into Cathie Wood's many ETFs, and they expected her to give them those 100% gains she was known for. It really helped that Cathie Wood was different from other investors. Her fund attracted new blood into the stock market, younger people who were more optimistic in the future that Cathie Wood was betting on. She set herself apart through emails which showed which stocks they bought and sold every day in a transparent way. She appeared to her audiences through tweets, YouTube videos, and explained her thesis boldly. She would make them all money by betting on companies which would own the future of the economy. Investors believed her. Unfortunately for them, they were just newbie investors who were pouring in stimulus money into the stock market. They didn't understand that the pandemic was boosting the stock market's valuations in an unrealistic and unsustainable way. Highs in the stock price were uniform across the board. Many tech companies in the pandemic and many others saw massive gains in their stock price. No matter where you placed your money, there was almost an implicit guarantee that you would make money hand over fist if you just invested while you were in the pandemic. So these deluded investors poured into Cathie Wood's funds, which were the ETFs that rode the pandemic wave in the best ways possible. But the pandemic ended. Teladoc, Roku, and Zoom stock price crashed as people used it less. Sure, there were still more people using it now compared to before the pandemic, but it was nowhere near pandemic highs. Many other companies which had sky-high valuations cratered as the economy shifted focus from services and goods suitable for a lifestyle where the owner was stuck at home back to the one where the end user was usually out and about, at work, or outside for a change. Cathie's stardom crashed just as quickly as it had risen. Her ARK Invest ETFs crashed hard, losing value faster than a speeding bullet. Cathie claimed the drop was temporary. She was sacrificing short-term gains for long-term profits. While Cathie is taking all this in stride, seemingly unfazed by the collapse of their ETF prices, her investors reacted in the opposite way. Suddenly, the woman who invested in Tesla, while everyone else in Wall Street was skeptical, didn't seem so heroic anymore. Perhaps her prediction that Tesla would go up by more than 1,000% years ago was a fluke. Many investors critiqued every move she made. It didn't help that she basically sold her China stocks, bought them back before reselling them once she realized China's financial-induced crackdown was continuing to destroy the stock market several months in. Coinbase and Cathie's bet on crypto failed as the crypto market took a tumble, wiping out massive gains. This came after massive controversies from major crypto brokerages like Celsius and FTX. Cathie's bet that Bitcoin would reach $500,000 failed.
I think one of the most massive misallocations of capital in the history of mankind. You have investors investing in the past.
When Cathie Wood went on CNBC to do damage control and reassure her investors, they made tweets poking fun at her flawed thesis, claiming her appearing on CNBC while her ARK Invest ETF prices fell in real time was an art piece. Others compared her ETF to the dot-com bubble when the Zoom app showed it was running out of time on CNBC. Twitter users claimed this was a sign that ARKK was running out of time, referencing the fact that Zoom, a company which Cathie Wood's ETF had bought, was doing very poorly. Cathie had tried tried to shift the blame to CNBC for being too cheap to pay for better versions of Zoom. Michael Burry took shots at Cathie Wood, saying Cathie's ETF strategy was bound to fail eventually.
Right, but with Michael Burry, this position was about $31 million. We don't exactly know why he's shorting Cathie Wood, her main fund ARK, but what we do know is that he's been warning about lofty valuations for some time. This ARK fund was a moonshot. It hasn't retained that momentum so far.
Other ETFs cashed in on Cathie Wood's woes by making inverse ETFs. Tuttle Capital Short Innovation ETF, ticker symbol SHARK, was made just to bet against Cathie Wood's plays, and they made money, a lot of it. Her flagship fund, ARKK ETF, also known as ARK Innovation ETF, was down by 60% by the end of 2022. Her other ARK Invest funds also took nosedives, a difficult pill her believers had to swallow after ARK Invest's peak in the early days of February 2021. You can see since then, ARKK has only continued to fall in value. But things changed. This year in 2023, Cathie's flagship fund has shown signs of revival. They're up by almost 30% this year. The Federal Reserve ended its rate hikes earlier than analysts expected, and investors are betting on inflation easing much faster than anticipated. A good economy meant more money to be made. Companies rallied, Tesla and other tech companies included. While investors who invested in ARKK are still down massively, the rise in ARK Invest's ETF's value is encouraging. Tesla's been up by more than 50% in the first month of the year. Tesla is Cathie's largest investment ever. The reason why Tesla's had a massive drop in stock price in the previous years was quite obvious. There was more bad news about Elon's disastrous attempts at running Twitter last year. The blue verification mark was one of them, where Elon introduced Twitter Blue to sell subscription services for $8 per month. It was fine until people figured out the new verification mark basically became worthless because everyone could buy the check mark. Apparently, removing the rigorous verification process opened up Twitter to more bad actors. Many trolls decided to buy the blue verification mark on Twitter on dummy accounts of public companies. They pretended to release tweets saying things that the real company would never say. Someone impersonated Eli Lilly, a company, and lied about making insulin free for everyone. Obviously, it was a lie, but investors believed it, and Eli Lilly's stock took a nosedive. Billions of dollars of value were knocked off Eli Lilly's stock within minutes. Then there was the news about workers who were not allowed to work from home, which became Twitter was allowing some workers to work from home and then deciding to not pay rent for Twitter offices so workers don't have a Twitter building to work in. Many backed out of Tesla stock as more people bashed Elon for being a grifter who became successful because of luck. More investors sold their Tesla positions. Many high-profile Tesla investors, like that billionaire superfan from Indonesia, accused Elon of focusing on Twitter instead of Tesla and wanted him to step down. Then the Elon jet controversy happened, where Elon shut down a Twitter account tracking his private jet location because some guy was stalking the car his kid was in. It was a complete mess. The later half of 2022 was the year where there was Elon Musk controversy coming out one after the other. Investors believed inflation and a weaker economy meant customers couldn't spend money on luxury purchases like Teslas, which are pretty pricey. Tesla stock couldn't catch a break and kept dipping down. Tesla stock price bottomed at around $100 in the beginning of the year when 2023 rolled around. Then all of a sudden, people began regaining their faith in Tesla stock. There was literally no Elon Musk controversy. Now that the horrible news from Twitter had dried up, there was not much FUD in Tesla stock at all. The stock was ready for a catalyst which would pull it up from its slump, and it got one in the form of Tesla's earnings call. Elon Musk, on his earnings call, told everyone Tesla's fourth quarter earnings last year beat analyst expectations, which were lowered last year as well. Elon told everyone he was bullish and expected demand for his Teslas to go up. He also said the company had deployed full self-driving betas for city streets for almost 500,000 Tesla owners in the US. Elon shipped 1.3 million Teslas last year in 2022. It was a 40% jump compared to the previous year in 2021. Their revenues were up by 51% as well. Earnings per share doubled accordingly to $3.60. Tesla stock basically went to the moon after earnings. It's now up by more than 60% this year, sitting at around $188 per share. There are some new problems. Tesla's decision to cut prices on its electric cars has triggered fears of an EV price war among all electric car companies, so a lot of EV companies' stock prices have dipped below 5%. The reason why Tesla dropped prices prices on its electric cars was because of the bad economy. He wanted to make prices of his electric cars cheaper so it would be more appealing to consumers. So far, Ford has responded to Tesla's price cuts by lowering prices on its Mustang Mach-E. All the EV companies are scared of dropping prices, otherwise they would have to lose customers. Not all EV companies are loaded with cash. If they do drop prices, their profits are also going to drop. That's why there's a lot of red in the EV market. Cathie Wood tends to double down on her most high conviction stocks whenever the market isn't doing very well. The stock market did horribly last year and her ETF struggled, so Cathie Wood doubled down by buying up as much Tesla shares as she could. It was a good bet for her since Tesla stock is up this year. She believes Tesla shares will reach $1,500 by the end of 2026, a tenfold increase, which is a very ridiculous valuation. No one knows what will happen to Tesla stock in the future. Still, Tesla's rise in stock price bodes well for ARK Invest's future. However, whether the other stocks in her ARK Invest portfolio will get enough gains to inspire her former investors is still unclear. Cathie Wood's redemption arc may just be in its initial stages. It's going to take a lot more to bring older and newer ARK Invest fans back into Cathie Wood's ETFs. Thank you for watching. Like and subscribe.